The following video is a 20-point highlight from one of the best-selling finance books called Security Analysis by Benjamin Graham and David L. Dodd. 1. The primary goal of financial analysis is to determine the intrinsic value of an investment and to compare it with its market price. 2. Intrinsic value is the present value of future cash flows, discounted at an appropriate rate. 3. Financial analysis should be based on a long-term perspective and a margin of safety. 4. The key to successful investing is to focus on the underlying business and its prospects, rather than on the stock market or the economy as a whole. 5. Financial statements should be carefully analyzed, with particular attention paid to the income statement, balance sheet, and cash flow statement. 6. It is important to understand the company's industry and competitive environment. 7. The management of the company should be competent and honest. 8. Debt and leverage can be both a strength and a weakness, depending on how they are used. 9. Dividends are an important source of return for shareholders, but they should not be the sole focus of investment decisions. 10. The price to earnings, PE, ratio and the price to book, PB, ratio are useful tools for valuing stocks, but they should not be used in isolation. 11. The discounted cash flow, DCF, method is a powerful tool for estimating the intrinsic value of an investment. 12. It is important to diversify a portfolio in order to manage risk. 13. Investment portfolios should be periodically reviewed and rebalanced as necessary. 14. The efficient market hypothesis, EMH, is a controversial theory that states that it is impossible to consistently outperform the market. 15. Value investing, as espoused by Benjamin Graham, involves buying stocks that are trading at a discount to their intrinsic value. 16. Growth investing involves buying stocks with strong earnings and revenue growth potential. 17. Technical analysis is a method of forecasting stock prices based on past price and volume data. 18. Fundamental analysis is a method of forecasting stock prices based on a company's financial and economic data. 19. It is important to manage taxes and transaction costs when investing. 20. The role of an investment professional is to help clients make informed investment decisions and to provide ongoing portfolio management. If you found this book review helpful, please consider subscribing. Thank you.